Hello from my desk. Haven't the past few days reminded us how quickly financial markets can react to geopolitical events? We've seen significant repricing in share markets, prompting sensational headlines across all forms of media and investors across the world being unsettled. It's moments like these that really test our resolve and perspective as investors. And it's a little bit difficult to tell if this is noise or an actual crisis. A Trump government is unpredictable in its nature, so we can expect financial markets to be unsettled as they continue to come to grips with the full impact of tariffs and the impact of potential future trade wars. There's the risk that the US goes into recession, but then again, that risk has been there for the past several years without materializing. So, as investors, this is something we're probably going to have to learn to live with. Drawing from a more global perspective, the global economy is in reasonable health. Companies are delivering strong earnings. Unemployment across major economies is quite low, and falling interest rates makes it cheaper for businesses to fund their expansion plans. Financial markets are efficient at factoring new information into company prices, and when the rules change, the future earnings of a company change, so the share price changes as well. The recent price falls reflect reaction, not ruin. As an investor, it can feel uncomfortable to see the value of your savings decrease. But at times, that's a normal, necessary part of financial market cycles. Deciding to sell because of daily price movements is rarely rewarded. Selling the investment isn't the difficult part. Knowing if and when it's safe to buy back in is the difficult part. And if you don't immediately need to turn an investment into cash, you're probably best to remain invested. Despite all of the headlines, I'm optimistic that investors who own businesses will continue to be rewarded with higher returns than those who have money in the bank. So let's look at a few things we do know. Firstly, uncertainty isn't new. Financial markets have weathered countless policy shifts and cycles before. Being a patient investor has proved more valuable than trying to predict the future. Secondly, if we do try and time markets, it's close to impossible. At times like this, it can seem counterintuitive to remain invested when prices are falling, but historically, this has been the most rewarding investment decision, to stay in your seat. Thirdly, sticking with your plan is often the best plan. The portfolios we build for clients are designed so we don't have to fall when prices tumble. Here at Line Financial, we try and help our clients have a successful investment experience. And in moments like this, we can help you sift through noise, keeping your plan on track, or just offering you a virtual hug or a helping hand. So to our clients, I'd like to thank you for trusting us to guide you through this. And please know that we're here for you. And as always, if you have any questions or concerns, please give me a call.